11,475 is where the market is open.
Mid-cap index, which is sulking, so down around 0.3 to 0.4%.
Since noon, actually, we're just trading in a 10-point range on the Nifty.
The market slipped quite a bit from the high point of the morning. Overall, once again, a large cap-driven day. Big gains in the indices in the last 30 minutes of trade.
A sharp rally in the last hour sees the Nifty and Sensex end 0.25% higher in the green. The mid-caps underperformed, shedding 0.25%.
Battle for Mindtree heats up. Sources suggest L&T is considering a hostile takeover, even as Mindtree promoters look to thwart it by considering a buyback on Wednesday. Mindtree stock rallies over 1.5%.
Maruti buckles on reports of a production cut in March. The auto major is expected to cut production by nearly 27% this month due to demand slowdown. Production this month is expected to be the lowest since March 2015.
India's first and Asia's largest REIT by size hits the market. Analysts tell CNBC-TV18 that yields could range between 7 to 8%. Real estate stocks surge. Prestige Estates, Brigade Enterprises and Godrej Properties are some of the top gainers.
The rupee surges to a 7-month high, dragging down IT stocks. TCS, Infosys are the key laggards. On the other hand, a strong currency and lower crude prices pull up oil and gas stocks. Well, those were the top 5 headlines from Dalal Street. Hello and welcome to Markets Today Talk Back. Today was the day when the bulls continued their rampage and stepped up their purchases in the last hour of trade. We'll tell you all those details, all the details of those 6 hours of trading in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant.
Lata, hi. Thanks very much. And once again, I think the last 45-30 minutes was crucial. Things picked up and we ended higher and surge in banks. We will talk about all of that. We will talk about the stories which mattered, the top 5 headlines, and of course our guests will be joining in to take your questions. Deepan Mehta is with us today, and so is Mitesh Thakkar. Thanks very much, Deepan and Mitesh, for joining us today on the show. But before we start talking about questions which you send us, let's take a quick look at what happened from the word go. Lata.
Well, the market started off with the memory of Friday, when we had a 4,300 crore of inflows from FIIs. I mean, some of it was MSCI balancing and whatever, but nevertheless, it's like almost $2 billion in the last 2 weeks. So that was strong. Asia was in the green. Crude was, well, still lower. So we had a huge tailwind, and there was this trade deficit number, which was like a 17-month low in February. So there was everything going for the rupee and for FIIs. And, you know, FIIs normally like a strengthening rupee because they're getting more rupees for the dollar. As well, they are confident that, all their stock market gains will be retained and not eaten up by a depreciating currency. So for them, this is the best time to invest. This was the tailwind for the Nifty when we started trading today. And then we ran into profit taking. We saw a burst. We saw the Nifty go past 11,500. And then the bigger advantage is for the Nifty Bank at such times, because a stronger currency, and the currency was really strong today, also means that there is lower inflation because imported goods are cheaper. And that brought down bond yields, helping the Nifty Bank, which to the end of the day remained the best performer. It was the best performing index. But then the late buying, after the profit taking, the late buying seemed to re-emerge when we got that news of SR Steel that the NCLAT has directed that Arcelor's resolution plan for SR be implemented, which means some 42,000 crore rupees is going to come back to the banks. That will mean, of course, some of their provision right back. So you saw the Nifty Bank charging up once again. The mid-caps are the one that are showing a little bit of underperformance. But I think it's just routine profit taking. If the foreign frenzy continues in the big stocks, then one would assume that risk will return to the mid-caps as well. So all told, even if there was a little bit of red on the screen, it seemed like the bulls have it.
The bulls had it. And of course, led by banks and financials, Lata, by far. So 0.5% gain on the bank Nifty. And look at what happened with these names: Axis Bank, Kotak Bank, State Bank of India, HDFC Bank. Leading from the front and clearly the strongest part of the market now. Other Nifty gainers not to be left behind. One big reason was RIL, which was up 2% by close, and that did its bit. IOC surged about 3.5%. Bajaj Finance was up. JSW Steel, Tata Steel and ITC were some of the other heavyweights which pulled their weight. Rupee impact, and this will come up on your screen. Look at this. HCL Tech, clear directional sector move. Infosys, Tech Mahindra, TCS, Wipro, all actually ending lower. That Maruti headline, although newspaper reports, etc., had its impact. So 2.5 lower on Maruti, Hero down 2.5, Eicher is down 1.6, 1.7. Inventory at dealers is at least 50% higher than than what it usually should be. That's the message for cars and two-wheelers. Mid-cap losers on your screen: Bharat Forge, Arvind. There was Ashok Leyland, which was lower. Vodafone Idea and Lupin actually down 4% by close. Mid-cap gainers: Jubilant Food inched up. There was PVR, which was higher by 3.7. Prestige Estates and Brigade from the real estate space, which did well as well. Lata.
Yeah, actually eating out and watching movies did very well.
Yeah.
That was one theme. Specialty restaurants, even Westlife, the McDonald guys also did very well today in trade. So looks like more people are eating out. But where is the index headed? We saw it go all the way to 11,500 and then we saw a bit of a profit-taking come at that point. So is it good to go for more? Let's ask our guests, Mitesh Thakkar and Deepan with us. Mitesh, mixed kind of day, but the Bulls still won in the end of the day. Would you care to go long tomorrow?
My sense is that, we've kind of seen markets taper off or give away some gains from levels close to 11,500. This happened on Friday, happened today as well. And we're quite overbought on the intraday chart. So I think around these levels, my belief is that we will see some profit booking and some pause. I think 11,350, 515, that's the very early indication, but that's where the intraday averages are placed. So 11,350, 515 could be the range which the market could consolidate. Eventually, I do expect it to get past 11,500, but for the next few days, the idea would be to slowly and steadily take profits as we're closer to 11,500 and try to buy the index on the dips. But stock-specific basis, clearly, a lot of stocks are catching up or breaking up on the intraday charts or suggesting upside signals.
Mitesh, any stock-specific trades going into tomorrow?
So a couple of names which I like, I think, which are showing good positive chart structure in the short term would be, one of them would be Torrent Power, a mid-cap stock. It's rallied from levels of 235, but it's clearly showing signs of continuation. I would look at targets close to about 272 to about 273 on the upside and recommend a buy with a stop at 255. And amongst the metal names, my belief is that Tata Steel could possibly show some positive traction. Last 7-8 days, it's consolidating. Once it breaks 530, look for targets of around 552 to be tested and can be bought above 530 with a stop at 523.
Okay, well, actually, Deepan, I wanted to ask you first that general question which I asked Mitesh. How do you feel about buying now? Do you think it's too elevated and you will wait for dips? Or do you think that, this train is going to speed on?
I think there'll be enough opportunities to buy into stocks. We have seen a surge of liquidity because of which markets have gone up the way they have. And it's not necessary that that liquidity will be continuously flowing the way it has. At the same time, I think we're entering into a highly volatile period as far as political uncertainty is concerned. And then there's also the earnings which will start middle of next month onwards or so. And I think that will provide enough opportunities for investors to get into stocks. I don't think that we need to chase equities at this point of time. Yes, but buy at correction certainly is a better strategy. It does seem that we have a rock solid bottom in place unless we have a disastrous election outcome. And I think market is building on the foundation it has created over the past few months or so. And more importantly, we need to watch out for follow-through buying at higher levels. But I think consolidation would be the key going forward. So I think better to wait and watch and buy at every correction.
Okay, so that sets us up in terms of a top-down view, in terms of how to approach the market. We move on to the second story today.
Buy on dips,
buy on dips. Yeah.
Well, don't chase the rally.
Yeah, absolutely. Battle for Mindtree heats up. Sources suggest the L&T management is considering a hostile takeover, even as Mindtree promoters look to thwart a takeover by considering a buyback on the 20th, that is Wednesday. Mindtree stock ended the day up over 1.5%, while L&T ended in the red. We have Nisha Podar joining in with all of the latest details. Nisha.
It's the first hostile takeover battle in the IT sector in India, where Mindtree promoters with their 13% stake in the company are trying to protect their turf. And Larsen & Toubro, the big boy, is proposing to buy out VG Siddhartha's 20% stake along with CCD's stake and trigger an open offer to acquire the controlling majority in the Mindtree. But remember that Mindtree tried to come up with a buyback announcement, and the deal announcement by L&T is preponed so that the buyback plans are scuttled. So what we do understand is that any capital structure change after a public announcement of the open offer will require any buyback to have a 75% nod from the shareholders, and that is through a special resolution, which looks extremely difficult at this point. So buyback plans foiled, but we cannot rule out more action being taken by Mindtree promoters to protect their turf.
Okay. We also spoke to Mindtree's founder, co-founder actually, Ashok Soota. He expects the Mindtree promoters to come up with another plan, as he doesn't expect their buyback plan to achieve much in this takeover tussle with L&T. Hear out Mr. Ashok Soota.
If there's a buyback, it's only a part of the financial strategy. In a way, the buyback also works in the other way, because then the percentage of shares that are needed, those shares are bought over and extinguished. Then the percentage of shares that are needed to reach that 26% also goes down. And so in itself, I don't think it's going to achieve too much. I presume there's another financial strategy which will emerge, because otherwise they would not be making the sort of statements we've seen in the media today. Up till now, you could sense that there was concern, they were working on it, and it's not an easy job. But I think there has to be an additional backup strategy of another investor with deep pockets.
Okay, there is Mr. Ashok Soota, who sold his stake to start a separate business sometime in 2011 or so, weighing in on the matter. Okay, I think we have a question on L&T. So let me just take that question in any case. Good. So I think Godavarti A is writing in on L&T. He's got 100 shares of L&T. His cost is 1,380 rupees, and basically wants to know whether he should continue to hold or sell. Mitesh, what would you say? L&T cost is 1,380.
Okay, I think we should go to Deepan. We're not able to reach Mitesh. Deepan, L&T shares purchase price is 1,380. Continue to hold, or should one book profit?
No, absolutely, I think continue to hold. L&T has been hit by a bit of a sort of negative news on account of the fact that elections may slow down the order inflow, and they are, I think, managing market expectations in that context, the management that is. But I think the long-term prospects are great for L&T. The order book position remains quite strong and should pick up post-elections, whichever government comes into play. More importantly, I think the orders that they are sitting on will be margin accretive, given that they've been very selective when it comes to choosing of orders, be it overseas or domestic, having burned their fingers in the past. And balance sheet is in a far better shape than ever before. Subsidies also are doing pretty well, so there's a lot of value unlocking opportunity over there as well. So I would be very positive on L&T at this point of time. And when we spoke about buying at dips corrections, I think L&T is another stock which could be on the investor shopping list.
Okay, take your point on that. With that, we will go to the third headline for the day. Maruti slipped in trade on reports for production cut in March. The automaker is expected to have cut production by nearly 27%, and that would be the lowest level of output since March of 2015. Newspaper reports indicated that the slowdown in demand was the key reason for this production cut. We caught up with Nikunj Sanghi, the chairman of the Automotive Skill Development Council. He's a major auto dealer himself, and according to him, Maruti inventories are piling up.
Maruti inventory levels, from what we understand from various dealers that we talk to, is around 5 to 7 weeks, which is normally less than a month.
Okay.
If Maruti goes in for inventory correction, and if the reports which have come out in the media are to be believed and are correct, I am sure other manufacturers, even if they do not announce a production cut, will want to get into an inventory correction position. I don't think the BS6 impact will be seen now.
Okay.
BS6 gets implemented on 1st April 2020. Liquidity crunch you can see in the market, both at the retail front and at the wholesale front.
Okay, so that was the dealer saying that 5 to 7 weeks of inventory pile up. There is a question coming from Sandeep Singh. He's calling from Andhra Pradesh. Sandeep ji, go ahead. Your question.
Hello, my Mitesh sir. Sir, I'm holding Maruti shares at the average 8,035 shares. Last few days back, I also added furthermore. So, is this good strategy to add furthermore the shares? I want to hold 100 shares totally. So, I'm with worry about by daily averaging. So, due to negative news. What is a near-term and long-term strategy?
Oh, shucks. Okay, Mitesh, since he took your name, you on Maruti.
So Maruti, I think 6,500 time and again is held out as a very important long-term support area. I think that should be the stop loss for long positions. One, I think the long-term charts have slightly been damaged with the fall in the last few months. So any rallies or trading rallies to about 7,600, 7,700, which is much closer to the holding price of the buyer or the investor, I think that should be used as an exit opportunity.
Okay, let's get a fundamental perspective as well. Deepan, what would you do with Maruti?
Yeah, I think I would like to hold on to the shares at this point of time. Certainly not want to do averaging, because I think the softness in sales seems to be persisting. And I thought that the February month production figures showed some glimmer of hope, given that the compact segment did high single digit, and the UV and the vans also had double digit or high single digit growth rates. And the reason for flat production numbers was on account of exports and the minis. Minis do not contribute materially in terms of top line and bottom line. So in terms of numbers, if they are flat or negative, it doesn't really impact the financial performance to a great extent. So I thought the Feb numbers look good, but if this news item about further cuts in production is true, then I think Maruti may stay at around these levels or so. No doubt long-term prospects are great, but we need to wait through this kind of uncertainty as far as production figures and sales figures are concerned. Eventually, I have seen in the automobile sector that pent-up demand starts getting built up, and then 2-3 quarters down the line, again, because the sales tend to pick up and you're back to double-digit growth rate.
No, Sandeep Singh wants to know what he should do. Should he average it lower, or should he just stay put, wait patiently, or should he sell out?
Wait patiently. Shouldn't average, shouldn't sell.
All right. Wait patiently, Sandeep. The stock eventually will catch up is the expert opinion. We have to take a break on that note. We leave you with some very interesting opinion that we got from the technical chart expert, Atul Suri of Marathon Trends. And we're coming back and taking more questions.
Yes, we will see volatility due to elections. There can be multiple outcomes. It's not a binary option. There can be 4 or 5 outcomes if you really look at it, if you read politics. But the fact is that irrespective of that, the bigger thing, the bigger trend is what's happening to global markets. You will have short-term volatility, you will go through ups and downs, but I think that the bigger trend is global, or the scenario that I've been talking about. Yes. The fear was that US Fed would continue tightening. Yeah. And post those statements, the rally that you saw in the US was ferocious. And along with that, very often US may rally, but EMs don't rally, like we saw in last year. But the beauty is that I feel the EM market has made a higher bottom, higher top. It's made a reversal. We are experiencing a global bull market, and India is doing a very big catch-up. A lot of domestic people are very obsessed with elections. And what is the BJP number? Will Modi be, not be, etc., etc. But I think that is really the minor story. If someone came out and told you that we would have a border problem and we would have some sort of, action happening the way it did, and you will start seeing record FI flows, you will see the market rally, no one would believe you. But the market has a way of surprising. And I think the big story here is a big global catch-up rally that's happening in India. I feel that the Dow is very interestingly poised at just sub 26,000. If the Dow takes out this 26,000 level, it corrected a wee bit, but if it takes it out and does a credible breakout, I feel the Dow is going to a new lifetime high.
by banks. We have Mitesh Thakkar and Deepan with us to take your questions. We got through 3 of the top 5 stories. So let's move on to the 4th one. India's first and Asia's largest REIT, that is Real Estate Investment Trust by size, launched by Blackstone-backed Embassy Office Parks. This pulled up the real estate stocks, with the Nifty Realty Index gaining almost 3%. Sonal Bhutra is joining in now. Sonal, real estate stocks were on fire today. Tell us more about this REIT.
Well, that's right. A lot of real estate stocks are buzzing in trade today, especially the likes of Prestige Estates and Brigade Enterprises. Prestige surged as much as 16% intraday today, and that is because with the new IPO by the REIT IPO by Embassy is actually boosting investor confidence. A lot of analysts are saying that this could pave way for all the more companies to come ahead and launch an IPO. So remember, all these companies, the likes of Prestige Estates and Brigade Enterprises, they have a leasing portfolio. A majority of their revenues come from the leasing portfolio. So if the REIT IPO by Embassy goes ahead and gains a lot of investor traction, these companies can also go ahead with REIT IPOs and raise funds. Additionally, RK Damani investing in this particular IPO has actually boosted investor confidence, and they are thinking that this is the preferred bet for further investments and a different avenue, of course. So this could be the re-rating of real estate sector and REIT as an investment avenue. Back to you.
Okay, REIT, Real Estate Investment Trust, a possible investment avenue, at least for HNIs at this point in time, can be even retail, because the minimum investable amount is about 2.6 lakhs. So perhaps a small investor can also hope to hold a REIT. Let's get to the 5th and the last headline today. The rupee surged to a 7-month high, and with it, it dragged down the IT stocks. Nifty IT lost more than 1%, pulled down largely by Infosys and Wipro. On the other hand, the strong currency and lower crude prices pulled up oil and gas stocks. IOC, HPCL and BPCL were the top gainers in the Nifty. So we have questions on the oil marketing companies.
Absolutely. PSN Murthy from Hyderabad has written in with a question on BPCL. He's been holding 500 shares of BPCL. His cost is 344 rupees and 50 paise a share. Wants to know whether he should hold or sell. Remember, oil marketing companies have had a decent run recently. What should he do? Mitesh, first to you. BPCL, 500 shares at about 344.
Still remains a good bet. I think it's kind of gone through a big correction from 540 to about 280 and now has reversed that trend. I think maintain a hold. Look for exiting or taking profits only once the stock is closer to about 460, 475 zones.
Deepan, BPCL, this gentleman is in the money. He bought at 340 or thereabouts. Now at 400 the stock.
There's a very strong current in oil marketing companies, and although long-term prospects don't appear to be great for a company like this, we do feel that in a short-term, medium-term, these companies could do well. So best to remain invested, never sell against the trend. At least that's the advice of the technical analysts, and I would like to follow that at this point of time, considering that our view is rather short-term in the stock at present.
All right. So we have another question for you in that case, Deepan. Rakesh Kumar Arora has 100 shares of Infosys. He has purchased them at 706 rupees each. He says he's a long-term investor. What should he do? Hold or sell?
I think next 2-3 quarters may be good for IT companies, including Infosys. So you may continue to hold over there, but I wouldn't expect to hold Infosys or other software companies for an extended period of time. As we see interest rates going down in India and overall domestic economy picking up post-elections, there will be better opportunities in domestic-focused companies. But for the time being, I think IT offers a safe haven for investors, and they should remain invested in that sector.
All right. Thank you very much, Deepan and Mitesh, for joining us and answering questions of our guests.
Well, it's from me, from Lata, me, everyone on the team. Thank you very much for staying with us here on Markets Today Talkback. More coming up on the other side.